Mr. Joachim von Amsberg, Vice President, Policy and Strategy, Asian Infrastructure Investment Bank. So welcome you all to the panel. 好的，切换回中文了哈。各位亲爱的现场的朋友们，还有电视机前的朋友们，大家好！欢迎大家收看从2019年世界经济论坛新领军者年会的现场带给大家的这一场特别的对话。那么今天呢，我们要探讨的主题是在全球化4.0背景下的中国经济的前景。我们知道哈，其实2019年到现在已经过半了，而且其实今天刚好是2019年下半年的第一天。
Of the second half of 2019, we do see that after sluggish second half of 2018, we do see economy stabilized, but however, we do see higher frequency of uncertainties such as the fluctuation of the trade tension and no-deal Brexit uncertainties, as well as the unstable global geopolitical situations, all of which give a heavy blow to the confidence of the investors as well as the economy. And the last several years, I often heard the frequency word that is uncertainty, as we know that uncertainty is the enemy to the market and investors. Today, before we talked about China's economic outlook, and let's put it into the global background, we want to talk about, okay, this is just after the first half of this year, and how do you see the uncertainties in the second half of this year in comparison to 2018? Do you have more concerns or do you have more confidence? And I will start from the gentleman, Mr. Ning Gaoning, next to me. We know that IMF and the World Bank for several times downloaded its forecast for the global economy. Talking about the trade, as we know that in April, WTO downloaded its trade growth forecast from 2.6%, actually from 3.7% to 2.6%. I know that your company, you are from a company, from Global 500 company, and you have inherent responsibility to have your trade mission. If you give a score to 2018, if the uncertainty for 2018 was 100, what do you think this year? What is your score for the uncertainty of this year? Maybe smaller? Maybe 80 to 90. Why? Because in 2018, we were still discussing the China-US trade restrictions, and in 2019, it becomes clearer. And the trade difficulties still exist, but now it's become quite certain we have such a difficulties in trade. And with this background, the companies get themselves prepared for their operation. Therefore, we see less uncertainties from the perspective of the business. In the new environment, we have a clearer idea of it. Well, what is the biggest challenge to the companies nowadays, and what are the opportunities ahead? The Chinese companies, the opportunities comes from the transformation and upgrade. And with the economic upgrade of China is promoting the transformation in terms of operational changes. The friction between China and the US trade historically never happened, but it gives the best lesson and the best alert to China. Many heroes in the mind of the Chinese companies used to be the real estate companies and these top rich people. But now it's changed. The companies want to have sustained growth, more technological driven, and have more perseverance and with a good plan. And this is a big change or shift in the mindset. Therefore, the Chinese companies are confronted with the way of changing their business and models. Well, we are going to talk about the details of different industries. I want to ask Mr. Zhu Ming. And yesterday, I was just flew back from Osaka for G20 summit. And G20 summit gave us some positive signals. Some of consensus are made and some negotiations will restarted. Therefore, at this time point, what do you think of the uncertainties? What is your score given to the uncertainties? First of all, and Mr. Ning is a highly respected by me. You have a broad range of experience and international vision. I agree with most of what you say, but today I will not. Well, I'm sorry, Mr. Ning, and I'm waiting for your correction. And go back to this question. If we look at 2019, the risk goes up instead of going down. Like you said, I said uncertainty. Uncertainty, I'm not talking about the risk. Just now, I said 2019. It's very sure. Risk is not smaller, but bigger, but it is for certain. So I'm making comments on the certainties. We do not have uncertainties this year. This is what I want to say. So the risk is getting bigger for certain. So you already reached consensus. Why I say that the risk is growing bigger? Because the no-deal Brexit, the risk going up. Do you agree with that? The risk going up. And uncertainty goes up, risk going up. Do you agree? And think about it. October the 28th, Boris Johnson. And it's very likely Boris Johnson will be the Prime Minister. And the risk of his being a Prime Minister will also go up. And October 28th, think about the no-deal Brexit. What will happen? Commodity in that day on the ports and the borders and cannot get into UK and to the north of it. And all the goods will be stopped and no outflow of the commodities. You need to sign this contract with with a lot of countries. And all these whether you use the UK standards or the EU standards, in that moment you need to make decision. The whole world will be in chaos. It's difficult for me to imagine that morning, 9:30 that morning, the financial market, what will be the reaction from the financial market? This is the first and the biggest challenge to us. And the second challenge this year, and the negotiation between China and the US just came back from Japan. And after the talk between the two heads, and it getting relaxed, especially the President Trump forced and start to agree to offer supply to Huawei, which acknowledge that industrial and the technological supply chain cannot be dismantled or disrupted. This is something quite good, but the trade friction between two countries is something certain, something for long and ongoing. And from the March 23rd and the US 301 from last year, and the US changes his opinion very often. And we do want to see that from autumn this year we can reach consensus or agreement, and it's to the two sides' benefits. However, many things are now lie in the middle, and the risk going up steadily. And in the second half of this year, a bigger risk is about the cyclical downturn of the economy. Mr. Ning, you are quite right. Certainty is there. And the finance and economic downturn is coming, but the risk is also going up. And from 2.9, and the first quarter, US is quite high, but the second quarter, third quarter goes down. And this year, the growth rate go back to 2.3, 2.4. Will it even go down? It's decided to the trade war result. So the global financial market, so it's already from the top to the bottom. That's why we do see the interest hike and the cut from the Federal Reserve, because it gives a lot of confusion to the market. A quick question: and what do you think of the actions of a Federal Reserve last year? Still the interest hike, but some central banks busy buying the gold and cut interest. And Redalio mentioned that this year it will going to cut interest from the Federal Reserve. And it's our surprise, but it's also possible. Well, people say 3 times of interest hikes. No, I don't think so. But with the cyclical fluctuation, especially the no-deal Brexit, and while we have a no-deal Brexit and we have a new Europe Council, and in total, the weighting is no more than 50% of the voting right. Therefore, and the hard side of it is the EU, and there are 2 hard sides of it. Under such a fluctuation, and it's possible for the Federal Reserve to cut the interest.
As an investment banker, you're in the business of facilitating and monitoring global capital flows. So you have a privileged perspective in terms of fluctuations in investor confidence. So tell us a bit about what you have been observing.
Well, first of all, before I answer your question directly, I just want to set the Chinese economy in a global context. The Chinese economy this year is 13 trillion US dollars, number 2 in the world in terms of size. If you look around the Asia-Pacific region, there are 16, 17 countries. You have Japan, whose GDP is about 5 trillion. ASEAN 10 countries in Southeast Asia, about 2.5 trillion. India, 2.5 trillion. Australia, 1.5. Korea, 1.3, et cetera, et cetera. You add up all the Asia-Pacific countries' GDP, they equal China's GDP. So what this means is that China accounts for 50% of Asia-Pacific GDP. It also accounts for 16% of global GDP. The second point that's important is that even though the US economy is still larger, about 18 trillion US dollars, China is growing 3 times as fast. This year, as Dr. Zhu Min said, we're already seeing a slowdown in the US economy. The growth rate will probably be around 2%, while China is still growing above 6%. JP Morgan's forecast is 6.3%. So what this means is that China is contributing more to global growth than any other country. As a matter of fact, if you look at global growth this year, China accounts for 35% of global growth. If we look farther out into the end of the next decade, by 2030, we believe the Chinese economy will be around 29 trillion US dollars. By that time, China's GDP will be 90% of the US GDP. So it is critically important for us to understand China's importance to the global economy. So as we advise many top global investors, multinational companies, and Chinese companies these days, everyone is looking to invest more in China. However, China doesn't have a free capital account yet. So global investors have to use certain channels to invest in China. They can invest through Hong Kong, through the Connect program. They can obtain a quota, QFI, to invest in China. Also, if you look at corporations globally, Fortune 500 companies have already invested a lot over the last 20 to 30 years in China. Many of them are still investing in China. However, the nature of that investment is changing. They're focusing much more on the technology sector, AI, biotechnology, as the manufacturing industry is going through a transition. So I would say overall, this year, China is still growing at 6 to 6.5%. And importantly, the drivers of growth from China really are changing. The transition away from dependence on exports, more towards domestic consumption, has already happened. And importantly, this year, out of the 6.3% growth, we forecast 75% of that growth will come from personal consumption. And
so
this is
I
a
think
sea
we will
change.
dive into those sectors in greater detail a bit later. But thank you very much for your comments on how China is being the pillar of global economy. And then the next question is to Mr. Smeater. Actually, last month, the results of a McKinsey survey on global economic conditions revealed that executive sentiment is at its lowest in years. And I think the worrisome thing is that actually all these pessimism has reflected more concerns that expand beyond the US-China trade impasse, which has dominated headlines. And many actually expect that the trade levels between their home countries and the world writ large to decline in the coming years. So do you think this trend is going to continue, and how long do you think that's going to persist?
Yes, I do. I mean, it's hard to remember that a year ago, in June of 2018, that same survey that you referred to basically went 1/3 thought the economy in the world was going to get better, 1/3 thought it would get worse, 1/3 thought it would stay the same. The survey that you're referencing, that 1/3 who thought it was going to get better is now 13%. The 1/3 who thought it's got worse is now 57%. And there's still 30% of people out there who think it's neither one nor the other. So in that context, we have to ask ourselves, is this really about a trade dispute, or is something far more fundamental going on? And the reason why I believe that the one thing we can be certain of is that the uncertainty will continue, is because of some fundamental changes. And I would characterize them as 4 disruptions and a revolution. And that's what's driving what's going on. The first disruption we've been talking about, which is shifting power. Shifting power in terms of the way in which people trade with each other, shifting power in terms of the absolute importance of this country to the world's growth, shifting power in terms of the established institutions that are now being challenged. All of that is a key disruption. Second thing that's changing, the consumer. Our consumers around the world are very different today than they were in the past. They're literally different because millennials are taking over in this country more than in any other. They're different because we also have a very aging population who need to be provided for. Huge strain in social systems. The third disruption, populism. Populism in the sense that people have seen the shares of globalization and its benefits fall unequally, and that has led to discontent, particularly in the liberal West. And the fourth is the environment. People are very upset about the environment for good reason. Emissions keep rising. Those 4 disruptions are fundamentally important, but the revolution that really I think is absolutely driving some of these trading shifts is an industrial revolution. And Klaus Schwab and the WEF have written extensively about it. But the reason why that's a revolution is because it's that which is meaning that labour arbitrage, which this country and others have used to build their economies, is less and less important. It's a revolution that therefore means regional trade becomes more important than multilateral global trade, and that's a fundamental shift. I think you put that all together, and it's no wonder that we're seeing real challenge and real uncertainty, because these 4 disruptions and that one revolution mean that the established ways of doing things no longer work so well. And everyone, business leaders included, are trying to figure it out. And then uncertainty is growing because people do not have the answer. And if someone says they have the answer to how this is all going to play out, good luck to them. I think the one thing we can be certain of is we don't know the answers, and in this uncertain context, we're seeing very different ways of playing this world take shape.
We're certain that we don't have the certainty here. And the question is for Mr. von Amsberg. I watched an interview you gave at the beginning of the year, citing challenging economic and geopolitical challenges as a source of concern for the global investment community. Ever since, however, the AIIB seems to have seen a healthy amount of activity and growth, including just over a month ago, this historic bond issue. So do you think the world has turned a corner, or we are just slowly rolling into more challenging and more difficult times?
Well, I think I'll come down on the side of those who are concerned about increasing uncertainty. And let me remind ourselves, uncertainty is less about Brexit, less about US-China trade tension, because those are already known. Uncertainty is about the things that could happen that we don't know yet, that we actually have not yet identified. And I do think if last year was 100 uncertainty, it's 120 or more this year. Let me explain why I think so. The fundamental reasons that require global collaboration are becoming more important. Mr. Snyder mentioned some of those. We have trade tension. We have disruption of financial markets. We have climate change. We have migration flows. All examples of challenges that require countries to work together. Why I'm concerned is that the basis for countries working together is becoming weaker. The trust in the international system is becoming weaker because you have countries that no longer act in sort of their rational long-term economic interests, as one would have said in the past. So as trust is less prevalent, it becomes much harder to deal with those uncertain events. That makes it more likely that accidents happen. The accidents we can't foresee, but the accidents, whether they're on economic or security or other dimensions that require countries to work together, work very quickly, as they did in the 2008-2009 financial crisis, where the large economies of the world very quickly took very unconventional measures in a highly coordinated way. Would that still happen today? I'm doubtful, and that's why I'm worried.
So never ask about the black swan, because if you know what it is, it's not a black swan. It comes down to trust and confidence issue.
We switch back to Chinese, talking about global background. Now we'll be talking about China's economic prospect. We know China already ranks number 2 economy of the world and could be the largest consumer market. And China's position in the world economy, on one hand, has been making major contributions and will be bigger and bigger. And in recent complex background, China's GDP has been growing by about 6% in this range. But we should not pay attention to this kind of quantity, but also we should pay attention to high quality mode of development. And I summarized the central government's economic conference, and they listed some major tasks. And these are some key points of including the manufacturing sector's high-quality development, and also the reform on the income distribution and stronger support to the private sector, including SMEs, and also comprehensive opening up and better guarantee protection of the people's livelihood. So, Mr. Ning, we know that manufacturing sector is always the priority because it serves as a fundamental for the real economy. But faced with the uncertainties presented by the supply side reform, and both the real economy and the manufacturing sector are facing challenges. So can you share with us what are the specific opportunities and the challenges? I'm quite optimistic. In the past 3 decades, all the predictors regarding China's long-term economic performance, those who adopted a negative opinion have proven wrong. And it happened almost every year, but they were wrong. And that means economic growth of China as a major trend. The momentum is very, very strong. By looking at it today, emerging economies for this year, their GDPs will surpass those of developed countries. Asian GDPs will take up 50% of the world. This trend will continue. Scholars may be more negative, and otherwise they have nothing to say, right? They want themselves to be heard, so they overinterpret things, And when talking about businesses, we should not overinterpret. If we are too pessimistic, we would do nothing, right, as entrepreneurs. And why I'm optimistic? Certainly, GDP is 6.5, 6.4, 6.3, but that's not important. Job opportunities, job placement is more important. And if you have sufficient employment, it's okay. Whatever GDP you have, GDP should serve the job opportunities. So in this regard, China currently, all consumption or personal consumption, even though at a low level, about 40% contribution, but in total GDP, it's the biggest contributor, about 70% in pushing China's economy. And on the part of the Chinese government, the government has introduced no further stimulus. And on the opposite, and they are reducing tax rates and reducing subsidies, and they are not introducing new stimulus, poverty alleviation in the environment or environmental protection, and to fight against financial risks. And these are placed as constraints, not incentives or stimulus. But still, China is still growing its economy. And if we liberalize the monetary policy or incentives or stimulus, real estate, for example, they have put lots of limitations in purchasing, in providing mortgages and so on. And also the U.S.-China trade friction is not a big problem. Why? Because China's export to U.S. is only 16% of its total export to the world. And 60% of the export was undertaken by foreign companies or U.S. companies, and so it's impossible for them to shift to move it to elsewhere. And Donald Trump said that factories are moving to Vietnam, and that made him unhappy. He said Vietnam is a worst country. That's what he said. So the impact is on people's mentality. That's it. For enterprises, as I mentioned, enterprises currently, I believe in the next 10 years, we will upgrade they will get upgraded for most of them. Why? Because they emphasize long-term plans, R&D, internal governance, and also their positioning in the international market, and they are more cautious in making investments, and they have a more rational way for further development, and this is a very good very good period for rational growth of the Chinese companies. I'm very confident. Whether we will score 6.3 or 6.4 of GDP, I'm not certain, but the Chinese companies will perform better. After this period, as I mentioned, China will, after 10 years, for example, China will be a R&D-driven country. It is happening, actually. And also, it is happening on a larger scale. And in this regard, we are much better than a few years ago. Thank you for your analysis, Mr. Ning. And even though still we need scholars' analysis. Except me, others are scholars, and if I'm not optimistic, then other scholars will be more pessimistic, I believe. I do not know whether I should count myself as a scholar. You are a professor, but I'm in favor of Mr. Ying's optimism. But scholars are more objective. To be more specific, I have a question for you. You served for IMF, and the data for Mr. Ying is not so important. IMF actually upgraded its expectation from 6.2 to 6.3, and it downgraded a little bit. We are not certain whether it will be 6.3 or 6.2, but how to quantify so-called high-quality development. High-quality development, there are two concepts which are very important. One is the competitiveness of the companies, especially in the manufacturing sector, as pointed out by Mr. Ning. China's manufacturing sector is the biggest in the world. It's the aggregate of Japan, U.S., and Germany, and we cover the fullest in the supply chain of the manufacturing sector. So that's our competitive edge, and how to improve the quality of the manufacturing sector, and how to go further upward to the upper stream. That's the core challenge. And once we moved very fast for manufacturing sector, we are producing more and more high-tech products. But the high-tech products are still at the lower end in its specific spectrum. Now we have AI. And AI will disrupt the manufacturing sector's upgrading pathway. And manufacturing sector will be automated and will be smart, and that's very good opportunities, but also a challenge for China. And the full automation and full smartness is about China's future. Let me give you an example. And so let me. I will try to be objective and by sharing data. And the robots per 100 workers, Korea has got the highest percentage, whereas China's percentage is the lowest. And that's for 10,000 man workers. We got only 22. That's the lowest. And so smartness and high-tech will be very important for high-tech development.
I have one follow-up question to Mr. Ning Gaoning. And people talked about the technologies and the fourth industrial revolution to enable all the industries. And we talked about the 5Gs nowadays. And maybe to the audience of the TV now, probably they feel that they have faster connections. but they do not know and how 5G will improve our economy. And I want to know that you are from the manufacturing and the real economy, as well as the company you are serving. And do you do anything relevant to 5G or the industrial revolution things? Well, I will be more optimistic if I try to answer that question. And let's give Mr. Ning a round of applause. And Professor Zhu Ming and Professor Zhu, and we are very friendly to each other offline. But now in the podium, we are still friends, even on the podium. Well, what I want to say is that scholars, yes, they are objective. No laughing? You have no laughs? Yes, Claude, for being objective. But where did the statistics come from? From the companies, right? Your statistics come from the companies, from the business. And what I want to say is that just now you talked about the upgrade of the industry. Give you one example. In Dalian this year, and 30 to 40 kilometers away, there is a new oil refinery factory or plant, probably you know about it. And this refinery is not an average one. This is integrated. And from the oil refinery, ethylene, olefin, PTA, and it's all the largest worldwide in terms of its volume. It's not only about its size, but the whole industry from the crude oil supply to the materials and the plastics, these kind of things generated. And this is a very rare case worldwide. Let's talk about these technologies. And of course, Sandokan, I just had a meeting in Jiangsu, and you talked about 5G, artificial intelligence, and how do we use them or deploy them within a plant. It's now widely deployed. But everything is under progress. In the past, we talked about the plants and high efficiency, low cost, but later, higher automation, less labor, higher safety level. But now, with AI, with the faster connection and the data digitalization, so that every step within the plant, the data generated could be sensed by the sensors, could be abstracted by the sensors, and put them into a central computing system. And after computing system processing, you can find the optimal way and have that information back to the machines. The machines at every second is looking for the optimal operational model, which means lowest in the energy consumption with the highest output, the safest. And so everything is in usage now. From this perspective, I should say China has the latecomer advantage. You can see Boston plant in U.S. caught fire. Seldom do we have such news in China. That's why I'm optimistic. I have reasons to be optimistic. So the plants in Dalian, and is belong to you? Belong to your company? No, it's not within our group. Well, and we have cooperation, but it's built by others. I want to ask another scholar, von Asperg. I know you are also an economist.
From an economist's point of view, as investment tapers, where do you see will be the key drivers of China's economic growth in the coming decade?
So I do see, as both a banker and as an economist, the scenario quite optimistic. China has moved to a more balanced growth model. China has rebalanced toward a more consumer-driven growth model. China has drastically reduced its current account surplus to a much more balanced economy. And China has come down from stellar growth of 10% to 6 point something growth. Now, mind you, growing the current economy of China at 6.3% still adds more to global output every year than 10% growth 10 years ago on Chinese economy half the size. So if we talk about slowdown, we have to really put that into relative terms and recognize how much China is still adding to the global economic dynamic. Now, there are many directions in which I think that dynamic will continue. We just talked about technology. I think if anything, the current threats, disruptions to global supply chains will add to China's determination to develop in high technology industries. And in that area will become a driver of maybe a somewhat reconfigured set of global supply chains, but China will be a driver. Let me talk about the industry we are working in, the Asian Infrastructure Investment Bank. We are investing in infrastructure. China's investment has a long time been driven by investment in infrastructure domestically. Now, other countries in the region are, I think, looking at that model and looking to invest in infrastructure as a driver for their economies. We are financing those investments. In some cases, Chinese companies are financing those investments. In other cases, there are other countries that are financing those investments. But I think the model of infrastructure as forward-looking driver of economic development is something that an increasing number of countries in the region adopt, and I think will succeed with.
And aside from technology and infrastructure investment, many are pointing consumption and an expanding service economy as main drivers of the economy. But take consumption, for example. The evidence is really mixed because we know that car sales dropped significantly late last year. But if you look at low-cost e-commerce platforms like Pinduoduo and also high-end luxury retailers, they both gained steam. So I know Ms. Ulrich and also Mr. Sneeder, you both have a lot of insight into these segments. So please tell us about what accounts for these trends.
Well, in terms of consumption, which is now contributing 3/4 to China's GDP growth, I see consumption powering ahead despite the economic uncertainties. And the reason is that Chinese people are really now trying to open up their purse strings. They're spending more, they're saving less. So if you look at the structure of the economy, it's really now transitioned to a service-driven model. In terms of the composition of GDP, manufacturing is now below 40%, and services are 10 percentage points higher, over 50%. And in terms of personal consumption, it's not just people buying goods. People are actually enjoying services. So in terms of travel, entertainment, healthcare, education, these are all very fast growing in China. And young people these days in China, they don't tend to be as conservative as the parents or grandparents. They actually spend most of their income. So the savings rate in China is coming down. And most importantly, we're seeing in terms of consumption going forward in the next 10 years, technology and innovation will become very important drivers of growth. We spoke about 5G earlier. 5G doesn't just mean faster speed. Of course, 5G is 100 times faster than 4G. But what this means is that it is going to transform the way we live and the way we work. For example, everything in your homes in the next several years will be connected, from your microwave oven to your cars. Everything will be connected. You mentioned car sales are down, and that is because that industry is going through a structural change. People used to buy a car, drive the car for 1 to 2 hours, and park the car 95% of the time. Because of the flourishing sharing economy in China, people prefer to be more environmentally friendly. Why own a car? Because the minute you buy a car, the value of the vehicle goes down. So a lot of people now choose to get a DD, for example, when they try to get to some place. And I would say in the next 5 to 10 years, because of the Internet of Things, because of 5G, we are going to have autonomous vehicles on the roads, right? So at that point, the infrastructure is very important because the autonomous vehicles will be talking to each other. The highways will have sensors. They will talk to the cars. And the speed of driving will be much faster than what is humanly possible today.
That's a valid
and a lot of the repetitive work that we do today will be actually handled by machines so that humans can free up their time to do creative work. Humans can free up their time to enjoy life and spend time with the people they love and like. So this is how transformation, exactly, and consume. So I think the combination of a pretty robust economic backdrop plus technology, innovation, and the propensity to consume and spend will actually mean in the next 5 to 10 years, China will continue to be a very strong global economic driver, not just here in Asia.
A very valid point. And Mr. Sneeder, I know you're a consumer expert. You actually gave a speech to the fashion industry about how to win in China.
Yeah, I was wearing this suit. Do you like it?
Yeah. So tell us about your...
Well, a couple of things.
take.
I don't think the question is the Chinese consumer market large? It's huge. I don't think the question is consumption is 76% of growth. Today it's 40% of GDP. The question is, will the consumer economy expand fast enough to offset the challenge of reducing the amount of investment that the government and others are making? That's the issue. And on that question, I am an optimist, but I'm also a realist. And I think it's important to just understand some of what's going on. First and foremost, what we are seeing, of course, is saving rates decline. We are seeing more consumers spending. But let's remember this. We're also in a place where demographics are no longer China's friend. The working population is flat to declining. That's a concern. It means at a time of automation, we need to make sure that more productivity comes into the economy. And so I think the real question that we've got to wrestle with is, will China's consumer-driven economy move fast enough, and will it be engaged in a productivity revolution versus where it is today? I love the example of the plant in Dalian, and that is exactly what China needs to deliver, because let's remember two things. China's productivity levels are somewhere between 15 and 30% lower than the OECD average in many facilities. That was okay when you were adding labour and when that labour didn't cost much. The labour is now expensive. Wages have been going up in double-digit figures for many workers across China, and the reality is productivity is growing even faster as people automate and add technology. So China has to win that battle. The second reality is China has done phenomenally well in the consumer aspects of technology. Weibo, WeChat, Douyin, and what's been happening in terms of TikTok. These are two examples where China's been doing extraordinarily well. But when it comes to the industrial side of the internet, China is not doing as well. It's still very reliant on others to provide the software that powers the industrial complex here in China. So I think the real issue we're wrestling with is twofold. One, I believe the consumer economy is going to grow, but will it grow fast enough? Jury is out on that one. And secondly, will China make the productivity gains that allow it to become an economy that sustains itself through its consumer economy, through a productive industrial economy, and not by pumping in stimulus and investment? That's the challenge for China. I think it's at a crossroads, and I think it's a little early to say which way that's going to play out.
Thank you very much for your insight. 那么，其实，在大阪的 G20 峰会上
G20 summit held in Osaka, Mr. President Xi Jinping made a very important speech. He declares the 5 measures opening China further to the outside world. For example, the market opening up and the an active list for the foreign investment in finance and manufacturing service, and several sectors we are going to see more opened up list. And in the final last 20 minutes, I want to have all of you to talk with me in terms of the opening up of China further, and what does it mean to the whole world? What are the opportunities? How to embrace these opportunities of opening China further to the outside world? I want to have Mr. Zhu from the scholastic perspective. And when the Boao Summit declares the further opening up, and China moves into a further opening up, and the threshold or the market access further liberalized in terms of the restrictions, all removed, and also cross-border channels for the foreign capitals, the efficiency is going up. And the manufacturing service, healthcare, medical service, and the media, and all kinds of sectors have been opened up. I should say that China's opening is even further than the past. In parallel, China increased its import. You know, import can really boost the demand. It's a great driver to the company's growth. This has been acclaimed worldwide. This is a good news because Chinese consumer market is so big. Everyone wants to get involved into the Chinese market. However, with the further reformed opening up of China's market, the next step is to build up an internationalized competition environment. For example, in terms of the banks, in terms of the tax and accounting rules, and the financial derivative markets, series of these problems, the hedge funds, and how could we really activate the market so that we can talk with the international market? And this is something highly significant to us. Therefore, it has a great impact on the world, but we need to build up this ecosystem, fully integrate into the world economy. And it has a great impact to the future of the world economy. Well, I want to ask Mr. Ning Gaoning, for many years you have been the China Council member for the APEC, and you have worked with 4 state-owned companies. Also, you have communication with the private companies. We know that the opening up of different sectors of China indicates more fierce and fair competition among companies.
Even though you said you are optimistic, but many enterprises are faced with have pressures. How they are going to compete? Are we ready, these Chinese companies, to be very realistic? Since China accession to WTO, about 10 to 20 years. We enjoyed a quite China-friendly environment in the national community, and China developed, and the whole world developed because China developed. And currently, China should change its mentality. Once we call ourselves a third world country, and we are using this label less, and we need people are talking about changing the rules of WTO, and this is because China's changes. Certainly, we need China also want a longer China-friendly period for China to grow. If the rules got changed, it's okay actually, but it's too early. But it won't cause a problem for China. And China would adjust itself very quickly and to be a all-round open up country. Xi Jinping in Osaka said, especially in international environment when there is a popularism, full of popularism, China should continue to promote in-depth reform and opening up. This is very good. China should, because in the international community, many friends and including scholars, they worry that if the U.S. adopts America first, so we adopt China first, and then we engage in a Cold War. But it seems it won't happen. Why? Because China is more open up. And China should quickly accept a all-round, should become an all-round open up country with zero tariff. Now the overall tariff level is 7%. It's not very high, but zero tariff and zero barrier and around open up in trade in goods and in trade in services, we should be more open up. And investment and also foreign exchange, we should be more open, and people exchange, we should be more open, and then we can lead the world. And talking about China's international position, could we do all this? I believe today's China is ready. Of course, we hope we can be given several more years, but actually we are ready. And I believe Chinese companies, they are ready for these kind of challenges sooner or later. And talking about the economy, whether it's exports or technology or products, you need a competitive edge of the Chinese companies. And the reform dividends are not fully released yet. And also, I also heard Mr. Zhu talking about the importance of competitiveness, but I'm optimistic. Even though I know tomorrow will be challenging in our profitability, but that's the right direction to go. Now we'd like to hear some international voices. First, Mr. Sniller.
You have unrivaled insights into what strategies should work best for companies. So if one of your international clients were to ask you about this one biggest opportunity in China this year, what would you recommend to them?
Well, I think the reality is China's consumer market is enormous. And so if you actually think about what's going on, the multinationals sell more in China than you do in any other market because of the scale and scope of the Chinese market. And I think it reflects three very simple points. China as a supplier is the largest in the world. It's 35% of manufacturing output. As a market, it is the single largest market. Take electric vehicles. China's 45% of today's electric vehicles. It's going to be even more in the future. And thirdly, it's the biggest provider of capital and recipient of foreign investment. So when you put all that together, what we say to our clients is China is still the largest growth opportunity in the world, despite everything. We can be pessimistic about many realities. And that's why I think we're seeing such a vigorous debate over trade. Because my last point is just a simple one, which in some ways the world needs China more than China needs the world. Why do I say that? Because the size of the domestic market in China is so large and it's growing in absolute terms equivalent to adding Australia every year. What's ended up happening is actually, if you look at the proportion of trade, technology and capital in terms of China's engagement with the rest of the world, going down because more and more of its attention is domestic. And so I think that's why this debate has a certain energy around it. And I really hope we can find a way to resolve it because as the largest supplier, the largest market and largest provider and recipient of capital, the world does need China and both need to play.
Thank you. And Ms. Orick, we know that the financial sector and access to capital are lifeblood to the real economy. I know that JP Morgan is very much invested in the process of China's further opening up of its financial sector. It's involved in the Shanghai, Hong Kong, Shenzhen, Hong Kong Connect, and we know international benchmarks are putting increasingly heavy weight on Chinese shares. I think this shows the recognition from international investors on China's capital markets. So how robust do you think this trend is, and how should we interpret that?
Well, China's capital market has had only a relatively short history, right, from 1991 to 2019 today. But now we have thousands of companies now listed on the Chinese stock exchanges. However, foreign investors' participation in the Chinese domestic market is still relatively small. In the coming several years, I'm hearing this all the time from global institutions that they want to get deeper into the Chinese market. They want to get real exposure to the Chinese economy through some of the best enterprises listed in Shanghai and Shenzhen. Now, of course, one of the hurdles is the conversion, free conversion of the Chinese yuan into international currencies. I think the capital account eventually will be open. China's currency, of course, is already is open on the current account for trade purposes, but not for investment purposes. I think foreign institutions want to invest more in China. They're exploring different channels through the Connect program, through a QFII. But in addition, I want to say opening up the Chinese financial system will actually benefit Chinese citizens. Because right now, China has the largest pool of savings anywhere in the world. It's about 26 trillion US dollars of savings in the Chinese banking system. That's around 200% of GDP. As we know, interest rates from banks are relatively low. So Chinese citizens can really benefit from a diversification of their portfolio holdings and their savings. So for example, if foreign financial institutions can come into China and offer various types of mutual funds, various types of products that give Chinese citizens some global exposure, that will help them diversify their risk. The second point about opening up is not just China opening its doors to foreign investors, but also it means Chinese companies and Chinese institutions investing overseas. We see a very encouraging trend of Chinese technology companies investing in Southeast Asia and the Belt and Road countries, for example. Some of the giants in the technology area in China have already invested in Southeast Asia in payments, in e-commerce platforms, in taxi hailing platforms. So I think a lot of the entrepreneurs outside of China actually very much admire the success of successful Chinese entrepreneurs. They look at Chinese entrepreneurs as a benchmark of success. So I think when you speak about opening up, it's not just about merchandise trade. China is already the single largest importer and exporter in the world. Of course, lower tariffs will benefit trade. But I think at a deeper level, opening up the Chinese financial system, opening up China's capital account gradually will benefit the Chinese economy in the long run.
Yeah, thank you. I want to spend a bit time talking about the AIIB because it really is a new model of multilateralism. So, Mr. von Amsberg, before you joined the AIIB, you were the vice president of the World Bank for many years. So, 3.5 years after it was founded, the AIIB now has grown to 97 approved members, so making it the second largest global membership organization behind the World Bank. And you have transitioned to a new governance model. So how is the AIIB different from other multilateral institutions? What does it aspire to be eventually?
So AIIB was created 3 years ago, initiated by China, but as a truly multilateral organization. It was built on the same model of multilateral governance, multilateral cooperation that the World Bank and the Asian Development Bank have been built. Very firm legal foundation, clear defined rights of each member state. But it was a different set of countries that took the initiative. It so happens that our two largest shareholders are China and India. And let me come back to India in a moment, because that's been suspiciously missing from our conversation here. So emerging countries have taken the lead to create a new multilateral institution. And as such, I think AIIB can play a critical role to make the multilateral system more robust to different countries playing different roles in the global economy. At the beginning of our session, I talked about the risks to the global economy and the need for global institutions. Now, AIIB is still small and young, but I think institutions like AIIB, in which different countries have created a platform for working together, can play a very important role for strengthening the robustness of cooperation and allowing collective action even in a very rapidly changing global economy. We have invested some $8 billion in 40 projects. We have now almost 100 member countries, so we're on a very good track, focused on infrastructure investment. Let me pick up on India, because India to me is a phenomenon that is rarely discussed here. We talked about the future growth opportunities, and India and China are our largest shareholders. Now, India is just next door, another billion people. Trade between China and India essentially doesn't happen. Imagine the opportunities that would arise if China and India open up to each other, started trading with each other. India happens to actually grow faster than China right now. So I just want to point out there are incredible opportunities even within Asia, beyond the already very strong integration within East Asia, that I think allow a lot of additional growth momentum to be unleashed, additional opportunities that aren't being talked about a lot. Now, infrastructure, again, is sort of a key ingredient for opening up some of those trade opportunities, and that's why I think we as AIIB have been created with this very strong mandate to invest in infrastructure, make trade possible, reduce the barriers to trade, and so we hope that we make our little modest contribution toward capturing those new opportunities that are still out there.
Thank you very much. 所以很重要的一个中心思想就是开放所带来的机遇。
So opening up will present opportunities which will be mutual. We should make this cake bigger for everyone. And so talking about real economy, I'd like to go back to Mr. Ning. China's development is, for the whole world, is a cornerstone. And for Chinese company, how we can make this mutual interest cake bigger, and that's still misunderstandings. How do we break down the worries, and how together with international partners we can achieve a win-win? And this question can also for other people from the international community. Let me talking about real economy, or talking about Chinese corporates. You can talk about China's companies. China's economy has undergone a industrialization period, and in that period, some people say it's a 3.0, 4.0 industrialization, and this industrialization in Chinese history is unprecedented. Of course, many other countries, including ASEAN countries, Southeast Asian countries, South American countries, African countries, they have not experienced a similar period of industrialization. that means in relative quick industrialization on a larger scale. And if you undergone this period, why we are not talking about the mid-income trap? We are talking less about mid-income trap. We surpassed that period. Maybe I'm over optimistic, but I think China has passed that period, and then the further industrialization will not be stoppable. China enjoys stability, and also China's governance mechanism has been optimized, and so this industrialization will just continue to improve.
Just now we talked about the real economy and the manufacturing sector, what I have experienced, and also the company I'm now serving, that is Sinochem Group. And what I see really makes me very excited. The pursuit of technological progress, the pursuit of competitive products, the wish to be benchmarked against the international companies in terms of the management is very popular and spread out in China. And this is something haven't been fulfilled in the previous generations in history. And how do we further develop ourselves? China and China's economy, China's development go with the low labor cost, low land cost, with environmental pollution, because China has large consumer markets. But now we want to see the connection between China's economy and the technology. This is something really can open up our imagination in the future. Thank you, Mr. Ning Gaoning. And so you conclude the session with an optimistic tone.
Upbeat note.
So everyone is becoming optimistic, I should point out. Yes, it's true. And especially I listened to Mr. Ning, and on your pad, what do you write on it? I have a glimpse into it from top to down, and you write down these key points. Yes, I'm writing down the words. And in this process, what we see is a Chinese entrepreneur, very successful, keeps learning. This is the learning spirit behind it. It's thousands, tens of thousands entrepreneurs. We have our open mind, keep learning, and we want to integrate with the world in a better way in China's economic transformation, making our contribution to the global economy. And we want to share more and better opportunities with the world. I want to thank all our scholars and experts and entrepreneurs. Thank you for your participation.